let's also welcome on board Rajat Sharma, founder and CEO of Sana Securities, as well as Vinay Rajani is also with us. A very good afternoon, gentlemen, and thank you so much for your time. Rajat, firstly, help us with your take on some of the recent darlings of the market. If I could give us some names, stocks like Paytm, where brokerages upgrades were seen coming in. Zomato had that quick commerce story playing in, and even stocks like PB Fintech as well as Dixon Tech were doing well. But given the market sell-off, see the sort of a correction that we are seeing, they have corrected anywhere between 15 to 20% from their recent highs. So, Rajat, any of these stocks that look attractive to you at this point in time, because feels like they are available at good bargains?
Good afternoon. So out of the three stocks you named, to be honest, I don't like any of these, and I didn't like these even when they were available 30-40% below where they are right now, because I think for PB Fintech and a lot of these other Paytm, there's obviously a lot of competition within that space. Paytm, I did say around 400 odd levels that this could be a prime takeover target by one of the companies, which may be the only reason why you should have bought this, which may be the only reason why people are buying this, because nothing has changed fundamentally since RBI banned their payments banks since then. So I don't know why the stock has moved up from about 400, 450 odd levels to like 900 or so. The only two stocks in this new age tech business which I like, one is Nykaa, because they have their own product, so it's no longer just an online retailer. So that's a stock where I feel, if prices fall to about 120, 130 odd levels, this could be a good stock to buy and hold for a long term. As a disclaimer, I don't have this in my portfolio. Zomato, I keep hearing that, the story is that you're paying extra to have the same food at home, which you could get cheaper at the restaurant because you don't want to go out, and you save up on the cost of traveling and you can have it at the comfort of your home. But the difference between the earnings and the stock price, the valuations, if you were to, how much could the earnings improve for this valuation to be justified? It may be a good business, viable business, especially with Blinkit, quick commerce and food delivery. But it has to dig gold somewhere to match up to the valuations at which it's trading. So right now, not looking to add any of these new age stocks in my portfolio.
Interesting to know that you didn't like any of these stocks, rather, because those were some of the stocks that most of our investors were actually discussing on the channel. But Rajat, if not these, then what are you looking at this point in time? Any of the stocks or sectors that look attractive and which may be available at a cheaper rate today?
Yeah, no, very, very boring sectors and stocks which I like right now. The traditional consumption businesses. I think Aisha was asking a question about specifics within consumption. And, within consumption, I like the FMCG space the most, the really core of consumption, the likes of Nestle, Britannia, Hindustan Unilever, ITC, because personally, my view is that this budget, there would be higher exemption on incomes. This budget would be all about driving consumption, both rural and urban, and the small ticket, things that you can get for 100, 200, 300 rupees. Basically, that's where earnings per will come. And that's also the segment of consumption, which is, I think, available really cheap. So if you see, FMCG stocks have not done anything in the last 3-4 years, because that's where consumption has hit the most because of higher GST or whatever may be the reason, but these stocks have gone nowhere. And, last time I was in a show, I said a stock like Asian Paints, which used to command a multiple of about 100 plus, and that was a darling of the market. And today it's available at a price to earnings multiple of 48. Nobody wants to buy it. And these are the stocks to look at right now as the cycle revives. A lot more money will come here. Looking at client portfolios every day, where I see a lot of clients complain that, markets are falling and our portfolios are falling a lot more than the markets, is because they've not made this reject. They've not moved out of, PSUs and defense, and they've not moved into these consumption themes and stuff. So I think consumption definitely is one space, and the other being IT, which is where we're buying more stocks. Mostly it's about buying more of what we already have. I said it 2 weeks, 3 weeks back before TCS came out with its numbers, and I think this trend will continue with a stronger dollar, a lot of these IT companies will keep posting very good revenue. 95% revenue is, overseas. So IT and consumption are two spaces, and the stocks that I spoke about, Infosys, ITC, HUL, Britannia, Nestle, that's where we're doing our buying.
And IT is the place to be, and we also got to hear some of the stocks. But Vinay, we understand that you are also here with us, but do allow us some time, because for now it's time to slip into a very short break. Don't go anywhere, we'll be right back. Back with closing trades, and it's a carnage out there. I mean, whichever way you want to describe, there's really no hiding place. There's Axis, TCS, IndusInd Bank, but that's just a smidge of a green. AB Capital, though, is one name which is decisively holding out, and BSE as well. Vinay Rajani as well still with us. But I want to come to you on some of these capital market players, right? I mean, CDSL, Angel One, 361 RAM, BSC, AB Capital. You think this is, while it's established, it's a structural trend, but are these stocks looking good for a buy? Any of these, either an AB Capital or a BSE, one of the top movers today?
So the trend is clearly down. So none of the stocks are looking good on the chart. So we have to, in technicals, we are following the trend and don't anticipate the bottom. Right now, the sentiments are quite weak, and small cap and mid cap, these stocks are falling like anything. So definitely this is not going to be a good thing for the capital market thing. So this thing can go negative for sentiment wise as well, and the technicals are also suggesting that small cap still have the potential to extend the fall. So better not to look for any small cap, mid cap stocks out of this capital market. Though it can be good for the long term, but for technicals at least they are suggesting the weakness in the short term, and better not to anticipate bottom and stay with the trend. So right now, I don't think one should take any long trade for the short term in the capital market theme.
Okay, that's really the take coming in on some of these capital market players. But, Rajat, we've often talked about some of the private banks in the past. In this recent correction, do you think they'll once again emerge winners whenever the market does resurrect?
Yes, Aisha, I have no doubt on that. And I think some of the private banks, the larger ones, especially HDFC Bank, which is one of my favorites right now, they have to do well, because you have these banks available at such cheap valuations right now that whenever the cycle turns, a lot more money will come back into these banks. Make also, no mistake, and remember HDFC being the highest in terms of weightage on the Nifty. The problem we are facing right now, one of the biggest problems, is FII outflows. Whenever FIIs come back, which sooner or later they will, this is private banks like ICICI, HDFC in particular, are our favorites of these guys. And then from multiples of 28, now it's trading at multiples of 18, and that's the number one thing I look at. So financials, and within that, private banking is something I really like at this time.
Okay, let's take some BTST ideas as well on that note. Kunal, what's on your list?
So I'll go with two shorting opportunities. The first one is a sell on Indian hotels, with a shorter term target of 735. Stop loss could be kept at 785. Expecting that this correction would just about continue for a day more for the stock. And the second was a sell on PEL, something which I've been recommending over the last few days. So extending the price targets on the downside to 920. Stop loss could be till to 970.
All right, even today morning you were having a sell on Piramal Enterprise on an intraday basis. It's a 4% cut, but still would like to go with that STBT idea. But Winner, what's on your list? Any of your STBT or BTST ideas?
Yeah, so obviously I would like to go short, so because market is trending lower, and the stock like Dixon, which has broken below the crucial support. So Dixon is looking weak. So right now it is trading around 15,900. I think 16,200 should be kept as a stop loss in the spot, and I'm expecting a lower level of 15,350 to 15,400. So this can be a short idea for STBT for covering tomorrow.
All right, Dixon Tech is a shorting idea at this point in time to cover tomorrow morning. So definitely both of our experts are going with the sell trades right now. But amidst this, we do have also the dollar index that is seen to be hitting level of 110, and that's the spike that we have been discussing. The dollar is getting strong, and there's indeed some pressure that is coming in on the emerging market currencies, and rupee is definitely one of those. But in today's fall, some of these IT majors are also seen to be falling very sharply. And Kolan, if we can quickly have your take coming in on Coforge, because this was one of the stocks wherein recently as well we have seen a lot of these brokerage upgrades coming in, and today a 7% cut coming in on this counter. How do you see this?
So I would still believe that Coforge is one of the strongest names from the mid-cap IT stocks. Now there comes a phase in the market where the strongest stock eventually they would also start getting into some selling pressure, because then the law of mean reversion plays out into these stocks eventually, and there's mark-to-market adjustment selling which happens into individual portfolios. So I think on the back of this is where you expect these stocks to get back into a stage of underperformance or maybe some sort of a mean reversion. But then these stocks, more or less, they manage to hold on to their nature of being class outperformers from the respective sectors. So I think this space, I would believe Coforge could continue to remain as a key outperformer. Yes, short-term wise, there could be a bit of additional days of selling pressure, but once the market revives or gets back into any kind of a bounce back, Coforge would be amongst the first ones to indicate a very strong kind of a bounce.
Okay, that's that on Coforge, but look at the carnage that's played out in some of these frontline names. Look at a trend that's fallen about 5.5%, a little bit of a recovery somewhat. BEL down 4.25%. There's been a Tata Motors which has taken a knock of about 3%, 754 thereabouts on the futures for this stock. There's been M&M which has fallen about 3%. ONGC we've been flagging off from the word go today. And I also want to see what's happening within the broader end of the market. Look at Lodha. That's down almost 9%. Of course, it's an F&O stock. A Policy Bazaar has cracked about almost 9.25% as well. There's been Adani Green, which has taken a knock of about 9%. Relentless selling in Kalyan Jewelers in specific, another 8% of a fall today as well. Paytm is down about almost 7.5% today. And I want to check in on where DMart is closing the day after those earnings, which were a miss on all counts. And of course, that management change as well. A 5% cut is where DMart as well closes the day, with Avenue Supermarts at 3,500 thereabouts. Other than that, of course, like we've been pointing out, the carnage across sectors, the carnage across individual names from within the broader market has been quite significant. Naukri fell off about almost 7.5%. Zomato also has cracked, by the way, a good 6.5%. 228 is where Zomato is, and I think these are levels we've not seen on Zomato in a very, very long time. Supreme Industries, SVGN, there's been Adani Enterprises, Indian Hotels, which has cracked about almost 6%. 759 is where that stock shuts shop for the day. DLF has cracked about almost 6%. Oberoi Realty, I think sectorally, other than banks, because of their weightage and some of the specific IT names, it's really been Realty which has really taken it on the chin, be it an Oberoi Realty, DLF, or for that matter, Lodha, which has been your biggest laggard from within the real estate sector. Shrishti, what are you spotting?
I'm actually looking at some of these names that were actually successful in holding on to the shade of green. Aditya Birla Capital is ending the day with 1% gain after that Morgan Stanley upgrade. A good day coming in for Biocon after the Malaysia facility USFD approval. MSCI inflows in the FII holdings is actually quite less in IndusInd Bank, and Nuvama believes that this could be one of the key additions, and some inflows can be seen in IndusInd Bank. HCL Tech is also one of the stocks that we have been tracking. Results awaited is also shutting shop with almost flattest sort of a gain. Reliance Industries actually did support the markets, would say, because that's ending the day on a flat footing. No significant pressure coming in from Reliance Industries rather, but HDFC Bank, a cut of over percent, did weigh heavy on the Nifty Bank Index. Sectorally, definitely, yes, it's Nifty Media actually that is down about 4%, followed by Nifty PSC Basket, Metal, Energy, PSU Bank. These are some of the sectors that have fallen over 3% in today's trading session.
Okay, and with that, we're going to wind it up right here at this edition of Closing Trades. We'll see you again with all the market action tomorrow morning at 8 a.m.